Setting up a Dubai trust or a foundation is a solid first step. But the real challenge often comes the next. That is opening a bank account for that structure, especially outside Dubai. In this video, we'll show you which offshore banks are most open to working with Dubai foundations, what documents and setups they expect, and how to avoid common mistakes that leads to rejection. Before we start, my name is Shiraz Wahid and I'm the co-founder at Leopardus World, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. If you're managing wealth across borders, you already understand the value of a clean, flexible holding structure. What most don't expect is how differently offshore banks treat the UAE structures like DIFC Foundation, ADGM foundations, and SPVs. In this video, we walk you through the best options, where the red flags are, and how to align your structure with the right banking partners. Let's start with the basic distinction. When we say offshore banking, we are not referring to secrecy or tax evasion. We're talking about secure cross-border banking in stable jurisdictions like Switzerland, Liechtenstein, Luxembourg, Singapore, and even Mauritius. Jurisdictions with strong reputation, predictable regulators, and banking infrastructure that accommodates structure like yours. Each of these jurisdictions offers something unique. Switzerland is known for discretion and asset security, while Liechtenstein presents a hybrid legal culture influenced by both civil and common law traditions. Luxembourg stands out for fund management and pan-European access. Singapore brings Asia-Pacific connectivity and robust legal enforcement, and Mauritius offers a pragmatic, cost-effective route for specific asset strategies. So it's not simply about geography, it's about compatibility. Now, how do offshore banks view a Dubai foundation or trust? Unlike the typical BVI company, Dubai structures are seen as more compliant and transparent. That's a huge advantage, but it doesn't mean automatic acceptance. Each bank has its own risk appetite. Some requires physical link to the jurisdiction. Others look closely at the source of wealth, UBO structure, and purpose of the entity. So which bank tends to work well with the Dubai Foundation? If you want conservative option, Swiss private banks have accepted well-structured DIFC foundations, particularly when the foundation has clear asset protection or succession planning objectives. However, Swiss banks do prefer high minimum balances of at least $1 million, and they are selective about onboarding. But if your goal is long-term wealth preservation in a politically stable zone, it is a strong match. If you're seeking more transactional flexibility, Luxembourg and Liechtenstein banks might provide more practical day-to-day functionality while still maintaining a high level of compliance and client confidentiality. They also tend to be more familiar with the European asset holding context, especially if assets include operating companies or investment portfolios in the EU. Singapore is another strong candidate, particularly for Asian families using structures to centralize governance. However, banks in Singapore often requires a strong commercial rationale or Asia-linked assets to justify onboarding a Middle East structure. That said, when there's a multi-generational wealth angle, or when paired with a Singapore trust company, onboarding becomes more viable. Now, let's not ignore Mauritius. While not as premium in reputation, it offers a surprisingly effective option for foundation banking, particularly when purpose is simple asset holding, not active trading. For families with operating companies in Africa and India, it can also be a useful bridge jurisdiction. Some banks in Mauritius have even developed specialized desks for Middle Eastern clients. But here is where it gets technical. Offshore banks don't onboard the buy entity. They onboard the people behind it. That means KYC or Know Your Customer and due diligence on the founder. The UBOs, that's the ultimate beneficial owner, and sometimes even protectors or council members. You will need to prepare documents that align perfectly with the bank's compliance framework. Mismatched information, vague purposes, or unclear flow of funds are all red flags. The biggest mistake we see is clients trying to open accounts before the structure is properly positioned. For example, naming the wrong bank in the foundation charter or failing to appoint a corporate service provider the bank recognizes. In other cases, the structure is built for secrecy when the bank is looking for transparency. To succeed, the structure must be built backward from the bank's lens. That means asking, which jurisdiction does the bank trust? Does the bank require a licensed trustee or a registered agent in Dubai? Will the bank recognize the legal personality of the foundation? If it's an SPV, will the bank treat it as operational or passive? A common workaround is to layer the structure. For instance, a Dubai foundation can own a BVI or Cayman holding company, which can in turn open the offshore accounts. This gives the bank a more familiar legal entity to deal with, while still keeping governance and succession aspects anchored in Dubai. It does add cost and complexity, but sometimes it's the only path to onboard. Another useful strategy is aligning your foundation or SPV with a wealth management mandate. Many private banks prefer onboarding when there is an asset under management or AUM commitment, say $2 million or more, and a clear plan for portfolio management. This transforms the conversation from compliance to relationship. Some banks may even assign a dedicated relationship manager to help integrate the structure with family governance. If you're considering opening an account for Dubai Foundation or SPV, timing matters. Most banks will want to see the structure fully set up with notarized documents, a clear organization chart, and ideally professional corporate service providers. Avoid presenting the foundation to the bank as a work in progress. It signals risk. It also delays onboarding and may lead to duplicate due diligence later. You should also be prepared to explain the structure's long-term use case. Is it for holding global assets, passing wealth to the next generation, or acting as a family office? Offshore banks want to see continuity, not just short-term ideas. Ultimately, the best offshore banking partner is the one that matches your structure. The assets, the beneficiaries, and the jurisdiction involved, they all need to align.